If I told you there's a way to legally cut your income tax bill in half, dodge capital gains tax entirely, and protect your investments from inheritance tax, you'd probably raise an eyebrow. But that's exactly what SEIS and EIS do. And I'm kicking myself because in 2015, I invested £5,000 in a coffee chain startup through EIS. But that investment didn't go to plan. I lost money. But that same year, another startup was raising money too. A fintech you might have heard of, Revolut. And if I'd invested the same £5,000 into that, it would now be worth around £2 million. And with EIS, that gain would have been tax-free. Let me break this down for you. What EIS and SEIS are, what went wrong and right with my investments, and how you can use these schemes smartly. Let's go. So what are SEIS and EIS? Which I've previously called SEIS and EIS in a video, and I don't think I'd recommend that you do that. But anyway, what are these things? The Seed Enterprise Investment Scheme, or SEIS, and the Enterprise Investment Scheme, or EIS, are UK government-backed initiatives. They exist to make investing in early-stage British startups less risky by rewarding you with huge tax reliefs. And both of them are built on the same idea. You're backing small, often unproven companies. And in return for doing so, the government gives you a series of tax incentives. So SEIS, this is for very early-stage startups. And here's a rundown of the tax reliefs you get. You get 50% income tax relief, 50% capital gains tax reinvestment relief, no capital gains tax on profits after 3 years, loss relief if it fails, and no inheritance tax after 2 years. And EIS, which is for more established but still early stage startups, you get 30% income tax relief, capital gains tax deferral on gains, no capital gains tax on profits after 3 years, loss relief again, and no inheritance tax after 2 years as well. So through SEIS and EIS, you're reducing your downside, boosting the upside, and potentially avoiding tax altogether. Now let's bring this to life with a few numbers. So let me give you a real example of what actually happened to me. Back in 2015, I invested £5,000 into a coffee chain under the EIS scheme. For a few years, that business was doing really well. It was growing, new branches were opening, thousands of new customers coming through the door, but then the pandemic hit, and it really hit this business hard. They ended up selling at a bit of a loss to my original investment. But because of the EIS tax relief, I got £1,500 from the outset as income tax relief, which is 30% of the original £5,000 I invested. I was also able to get loss relief against the remaining amount. So instead of losing £5,000 outright, my actual loss ended up being about £1,900. Now, the tale of what could have been. That same year, another EIS eligible company was raising money. This was Revolut. If I had invested that £5,000 into Revolut instead, or in addition to, well, that investment would now be worth £2 million. And because EIS exempts capital gains, that entire £2 million gain would have been entirely tax-free. Sure, it's a painful if only story, but also the perfect example of why EIS and SEIS are worth understanding. Now let's talk about how the tax relief works. Let's break it down clearly. First benefit is income tax relief. In SEIS, you can claim back 50%. So if you invest £100,000, it would reduce your income tax by £50,000. For EIS, you can claim back 30%. So again, if you invest £100,000, you can claim back £30,000 in income tax. Now, of course, you must have paid that amount of income tax to be able to claim it back. I'm using a £100,000 investment example. You can use £10,000 or even £1,000. The same percentages apply. And the other thing is you will have needed to hold the shares in the companies you invested in through SEIS or EIS for at least 3 years, or you lose that relief. Then there's the capital gains reinvestment relief. With SEIS, it allows you to cut your capital gains tax bill in half. So let's say you sold another asset somewhere else and you made £100,000 gain on it. Firstly, well done. Typically, you'd have to pay capital gains tax on some of that, minus any reliefs. But if you reinvest that £100,000 gain directly into an SEIS eligible investment, then only £50,000 of that £100,000 gain would be taxed. And if I've done my maths correctly, that saves you around £14,000 in capital gains tax. At today's figures, that is. Now that only applies to gains made in the same tax year, so that's something to bear in mind. And you must also claim income tax relief on that same SEIS investment. Now let's talk about tax-free growth. If your investment succeeds, and whatever measure you use to determine success, and you've held it for at least 3 years, then there's no capital gains tax to pay on the profit you make. That's rare in investing. There's nothing else to say on that. That's just phenomenal. Now let's talk about loss relief. If the company fails, then you can claim loss relief on the amount after the income tax relief. So let's take an example. Let's say you invested £10,000 into an SEIS investment. You'd have been able to claim £5,000 in income tax relief. If that company fails, then you've lost £5,000, right? Because you've claimed £5,000 from income tax relief back. So your £10,000 investment has only cost you £5,000. So technically you've lost £5,000. But because you can claim relief on that £5,000 that's left, if you pay tax at the 45% rate, then you get get an additional £2,250 back, making your total loss on this investment £2,750. Now again, if I've done my maths correctly, then that's a 72.5% cushion on your original investment. Where else can you invest £10,000 of your money, and if the investment doesn't work out and completely fails, you will actually have only lost 27.5% of your money? Where else can you do that? Then there's the inheritance tax relief part. If you hold your SEIS and EIS investments for 2 years and then you happen to die while still holding them, okay, it's a bit of a morbid thought, but we're talking about inheritance tax here. If that were to happen, then all of those investments are fully exempt from inheritance tax. That's 40% of their value that your heirs don't have to pay tax on. Okay, so what's the catch, you're probably thinking? What are the risks? So let's be honest, most startups fail. We know that. We know the statistics, 9 out of every 10 or 4 out of every 5 or whatever it is. On top of that, your money is locked up for 3+ years. It's not guaranteed to grow, and it's often illiquid, i.e. there's no real way to sell your shares early. Even if the business survives, it could take 5 to 10 years to exit for a liquidation event to occur. A liquidation event is effectively when something happens that gives you an out of your investment. It could be an acquisition of the company, it could be a management buyout, or an initial public offering on the stock market. And you're not getting dividends or regular income on this investment either. And that's because these are growth plays, not income plays. So I think there's 2 things to remember here. And one of the rules that we always talk about when it comes to investing is never invest more than you can afford to lose. And that applies even more to SEIS or EIS investments. But actually more than that, whilst I invest in EIS and SEIS investments, that's not where the majority of my investments live. Most of my investments are in boring old index funds, like I've talked about before. But SEIS and EIS investments do play a part in my portfolio. And so now we're talking about how I invest now and how you could too. So after that past experience of 2015, this is kind of what I do now. So as I said, some of my investments go through EIS and SEIS funds alongside my primary stock market investments. Now these EIS and SEIS funds spread my investment across 9 to 15 different companies, which one reduces my risk, but it also has the benefit of speeding up the admin around the issuance of my tax investment certificates, the things you need to claim your income tax back. I should also point out that I get tax advice when submitting claims from these investments too. Claims for tax relief, that is. And that's because these reliefs are very generous. And whilst they're very well understood and it's an easy process to claim now, you don't want anything going wrong unexpectedly. So who are SEIS and EIS actually for? Now they're open to most investors who are based in the UK. But in my opinion, they're ideal for you if you're a higher rate taxpayer, simply because you've got more tax to claim back from these investments if you do invest. But it does also work for non-higher taxpayers as well. They're also good for you if you want to reinvest any capital gains you're making elsewhere efficiently. And they're also ideal for you if you're comfortable with risk and making non-standard investments. And of course, they're ideal for you if you want to build wealth tax efficiently. But it's probably more important to understand who they're not for. They're not for people who want short-term liquidity or guaranteed returns. This is not the space for that. But they're a powerful tool if you're thinking long-term. The minimums for the funds are usually £10,000 to £20,000. But some crowdfunding platforms like Crowdcube often allow smaller direct investments. But always check the rules and the specifics before jumping in. But I've got to say, nothing in this video should be construed as financial advice. Always do your own research and due diligence. And that goes for anything on this channel, really. I share all this because I want more people to own their own financial futures and not be victims to circumstances or a lack of education or understanding. So I share what I've learned to educate and inspire. So yes, I missed out on a £2 million tax-free windfall, and that stings a little, but I've had some wins too, and that's how this works. You don't win all of them and you don't lose all of them. EIS and SEIS aren't magic bullets, but they are some of the most generous tax schemes available to UK investors. Used wisely, they let you back great companies, cut your tax bill, protect your downside, and if you're lucky, unlock life-changing upside, tax-free. If you like this video, you learn something from it, give this video a like. It will really help get the video out there to more people like you. And if you've invested via SEIS or EIS before, then let us know your experiences in the comments below. I'd really like to hear from you. And of course, if you want to keep building your money IQ, then make sure you're subscribed to get notified when the next video releases. See you in the next one. In the meantime, here's a video you might want to watch next.